tell you guys a bit about the gentleman that's actually going to be talking and dropping nuggets on this call. You know, he's someone that I've looked up to from as soon as I got into IML, because I saw him on IML TV. And I remember the first event I heard his voice, I heard him speak at, I said, I need to be learning from that guy. And it's so crazy because I really used to dream about having calls like this. I really used to dream about doing events with these individuals and dream about actually getting them on a call where we can actually be collaborating together and he can just spread his knowledge with the whole world. And here we are today, right? Here we are today. We've got this absolutely amazing trader, right? Cut one of a kind, right? He's cut from a different cloth when it comes to trading. And he's actually going to be breaking down how you guys can actually make profits in these markets, right? You know, we're all here for one reason. We're here to make a lot of money from trading. And he's literally someone that can break down the rules of trading and show you how you can get in and out and making profits. So this call is being recorded. It will be uploaded onto YouTube. We will send the link out as soon as it is uploaded. But what I want you to do is get your pens and paper ready, all right? Get your pens and papers ready, all right? You know, this guy's gonna come into the call, he's gonna say, IML Nation, right? And I was supposed to go, awoo, 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 right? So I want you guys to put your cameras on, put your videos on, so we can all go, awoo, 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 together, man, because he could be doing anything right now. You know, he's got massive amounts of people that he needs to be trading himself. He says, you know what, one time I'm gonna take the time out to educate you guys on how to become an amazing trader like myself. So without further ado, I'm actually gonna bring on this amazing individual. It's actually an emotional moment for me. It's a call that I've dreamed of doing for so long, and now we actually get to do it with you. So Bale Granville, can you hear me, brother? Let me just unmute you.
Check 1 2, check 1 2. Can you hear me?
We're good to go.
Awesome, awesome. So I'm so excited to be on this call. I thank you so much, Montel, and is it Charmaine?
Yes.
Yeah, thank you all guys so much for the invitation, right? And to the people on this call, this gentleman, he is really an absolute leader. Him and Charmaine, and for organizing this for you guys to ensure that you guys are you know, get up to speed with your knowledge. It just shows his leadership and his love for you guys. So I just wanted to give it up for Montel and Charmaine. Give it up for those guys.
Thank you very much.
All right. Is it possible that I could share my screen?
Yes, let me make you a host right now. There we go.
Awesome. All right, so I'm gonna share my screen. I'm gonna cover a topic that I think is important in trading, but not many people appreciate it. All right, and it's called auction market theory. Okay, it's called auction market theory. And if I could just bring up, say for example, this Euro USD chart, for example, right? I'm gonna draw in the open here. Excuse my art skills. Okay, so in a normal auction, say for example, you were going to purchase a house or a car at auction, there would be somebody offering this car to you, and then there will be several buyers bidding, right? Bidding for this car. So let me see if I could draw here. All right, so somebody may bid 1,000. Okay. To start the bid off. Then the next person would bid 1,500. Okay. The next person will bid 1,600. And so forth, and push the price up until it gets to a price that nobody else is willing to bid up, and whoever made that final bid would be able to purchase the car, right? And this is what we call a single auction market. But in forex trading and in any trading in any markets whatsoever, we have both buyers and sellers bidding at prices, one for buying and one for selling. So as a buyer comes in, there may be a buyer at 1,000, and then a seller would say, all right, I want to sell at 1,200, for example. And if the buyer and seller agrees that, hey, all right, I'm happy to buy at that price, and the seller says, okay, I'm happy to sell at that price, then there's a transaction. And that's what happens in this market every day. Okay, so we have buyers saying, I want to buy, I want to buy, I want to buy. Seller saying, I want to sell, I want to sell, I want to sell, I want to sell. And usually, if you're making money in the market, usually it is a matter of somebody who had bought low becomes a seller who wants to sell high, right? If you want to make money in the market, right? You buy low, you sell high. So the market, let me just erase these bits. Okay, fine. Okay. So the market on any one given day will usually, okay, I see how to work this now. There we go. All right, so the market on any one given day will be okay, so let's just draw this here. All right, we have buyers, right? Buyers pushing the price up, then we have sellers coming in, pushing the price down. Then we have buyers coming in, pushing the price up again, up and up and up. And then we have sellers pushing the price down and down and down and down. Then we have buyers pushing the price up and up and up, and sellers pushing the price down, and so forth and so forth. And if we have price moving like this, right, we have what we call, of course, a range, but more technically, price is trading at a fair value. In fact, the middle of this range is what we consider a fair price or a fair value that these buyers and sellers are agreeing that is a fair value for the currency that we're trading, or whatever that we're trading, right? And then what happens is that somebody with a load of money will come in and then push the price out of this range, and say, for example, it drops off, right? So then we start, so this market here was in a balance, right? It was a balance, and then all of a sudden, because somebody who had more money and on the sell side came in and pushed this price down, then we started to get imbalance in the market, right? And the market usually goes from a place of balance to a place of imbalance, and then back to balance again. So what we'd usually get is, right, as price moved out of this area and pushed down, right? We start getting like that happening again, okay? So from balance, imbalance, and then balance again, right? And the reason why we get ranges in or the market moving from one price to the next is generally because of imbalance. Now, this fair price that the market would have agreed on is pretty significant. And one thing, whenever we're trading and we're trading, say for example, we day trading, right? Usually, price usually wants to find its way back to fair price. Okay, price usually wants to find its way back to fair price, and trading like this, what you would want to do is look for extremes, right? So this area here, we consider it they call it the value area, all right? And anything outside of that, so if price pushes outside of that, you want to consider taking a sell position to bring price back into balance here. Or if, for example, we had price pushing down here, we want to look for a buy position coming back into balance. And I'll show you what that looks like on the chart, okay? I'll show you what that looks like on the chart. So let me just remove this. So since we're on this Euro USD chart, we'll look at Euro USD. So say for example, I was just going to look at, this was yesterday's trading and this is today's trading. All right. So if I wanted to bring up an indicator here. Okay. From yesterday to today. Okay. So this blue line here represents, right, in between this blue line, it represents the value area that I was talking about a bit earlier. And this red line here represents a fair market price. And as you could see, when price pushed up and pushed up, and say, or even down here, when price pushed out and got outside of the value area, it always wants to find its way back in. Okay, always wants to find its way back in, and it pushed out again outside of the value area. It wants to find its way back in, and then it pushed out of this value area up here, and it wants to find its way back in, and usually it wants to find its way back into this fair price, right? So this value area, it acts as a fence, if you will, right? A fence for price to stay within so that it is in balance. But ever so often, price comes out of balance and then wants to find its way back into balance. Did I see a question there? Oh, okay. So that was, right, so if you go to your indicators, you go to volume profile, and it's just fixed range volume. That's what that is. So I could go to another chart. So if we bring up Euro JPY, for example, I wonder who was on the session this morning, because Euro JPY is right now in profit. So there we go. All right, so we had a entry here in Euro JPY. So if you were on the session this morning, you should be up on Euro JPY, 40 pips, and we're still holding on to that. But again, you could see here that Euro JPY price came out of this value area, and then it wants to find its way back in, right? So it's finding its way back into value area. It's coming now to this fair price. So we may see a little pullback from that. Okay, may see a little pullback from that. And this is generally what auction market theory is. Okay. On any given day, usually we would see buyers coming in at a lower price, and then we'll see sellers coming in at a higher price, pushing the price back down. Then buyers will come in, push the price up. Then sellers will come in and push the price down. And especially as we start seeing price going out of this range, it would want to find its way back in. Of course, in a strong trending market, doesn't happen like that or as smoothly as that always. And that is trading for you. So if I bring this back across here, okay, let's see whether we could get a nice range there. Nope. Let's pull a range from here to where current price is. Okay. All right. So we could see this here. All right. So price has dropped out of this fair value or this value area. It's dropped out of it, and it would always want to find its way back in so that it could get balance, right? Need to find some sort of balance. It pushed up, it came back to this fair price and then pushed out. So it was out of balance for a little bit. It's come back in. Right, pushed out again, come back in. And price will be doing that quite often until it breaks out. Now, there's something called there's a Wyckoff schematic. So what price does is on a bigger standpoint now. So if we start looking at it from, say for example, like a 4-hour time frame, daily time frame and above, we start seeing price doing some ranging, right? Price will start ranging, and then it will take off in a specific direction. So if I come, let me see question again. Okay. It is called volume profile. And I'm using the fixed range. But there are other ranges that you could use as well, and we'll come to that. Okay. So in Wyckoff's method, just take the session volume off. Okay. The price would get to a certain level and then begin to range. Then it would take off in a specific direction. I'm just trying to find a suitable All right. So say, for example, here, right, we had price trending upwards like this. Then it began to move sideways right here. Right? So price was trending up. Then it began to move sideways, sideways, sideways. Then it started pushing up, but it pushed out and it didn't really go too far. And eventually it dropped off, gave us a little retest in this area, and then continued dropping and dropping and dropping and dropping and dropping. Right? This is known as, if I could bring this chart up, this one here. Mm-hmm. Right? If you could get yourself familiar with this chart, that'll be very, very helpful as well, so that you know where you're at in the grand scheme of things. So we usually have phases in the market where we had a big downtrend, then we have what we call accumulation, right? So prices moving sideways, 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 sideways. We're having auction of buyers coming in here, then sellers, then buyers, then sellers, then buyers, then sellers. Right, then we'll usually have a bit of a fake out and then a push to the upside and a breakout. Or we have a distribution phase. So after we had a long rise in the market, we'll have a bit of a fake out and then we start seeing price moving sideways, fake out to the upside, then we drop, have a little test, and then it continues, start dropping and dropping. So that's when I go back to this Euro GPY, that's what we kind of see here. Distribution, seeing a distribution phase here, have a little bit of a fake out once, twice. It didn't break up or didn't break out and go up. And then it broke down. And then eventually we started seeing prices moving down and down and down and down and down. Right? Flash crash. And then prices continue going down. Now, right? And you see it actually really good on a daily time frame. It's here again, right? Whenever we see a big downtrend, okay, and then usually we start getting sideways movement. Right? It's a downtrend, sideways movement. Then we get a breakout. Price came back and retested more or less the middle of this zone and then eventually started pushing up. And you'll see that sort of motion in the market very, very, very often. So we could start seeing some sideways movement here potentially for market to start moving up. But that is how the market would work. Accumulation, distribution. Take a screenshot of this, right? Because that's a very important schematic. Four, 3, 2, 1. Cool. Right? Cool. So let's go back. So we see things on a bigger time frame. Now let's go down and look at things on a smaller time frame. So we use the fixed range in that example, but we could also use what we call the session volume, and the session volume gives you the range only on a specific day. All right, it gives you this ring fence, but only on a specific day of trading. So if I go back to indicators here and I pick session volume, Okay, we start seeing the session volume coming up on every day. You start seeing the ring fence. Now it looks slightly different, so I'm just gonna include what I need to include here. So I want to see developing POC, developing value area, and I'm gonna take this off. Okay, so let me just put on the session breaks as well so we could know what days we're at. All right, that's fine. Okay, so this was today, this was yesterday, this was the day before, right? This was the day before that. Wednesday, Tuesday, Monday. Okay, so we start seeing price moving out of this fair value area and pushing up. But what is happening now is that it's been creating a new value area and pushing up. Okay, and then what it does, it comes back to an old area here that was previous value, then pushes up. Right, we see a retest again back to this old area that was previous value. It broke down, came back to this area that was previous value down here, of previous fair price, if you want to call it that. Right, we have a fair price down here. It's come back to that, and then it pushes away. So whenever people see me drawing my support and resistance and they're thinking, well, why is he drawing his support and resistance there? I draw my support and resistance at previous fair value prices. Right? You notice I don't really use any other indicators or anything like that. All I just want to see is specific prices. And when I see specific price levels, that is what I want to trade off of. So right here, that's how I got that level here today for this Euro JPY, for us to take that buy for the upside. And it's as simple as that. I'm just looking for previous fair value, and then we make that push to the upside, or previous fair value and we take a sell, depending on how the market's going. This Euro JPY, I'm expecting it to push all the way back up here, right? And I'm looking at this previous fair value up here, right here. And that is what I'm looking at for this trade to push up. Now, it may take several days to get up there, but I'm cool with that. So I'll just be holding on to this. It's risk-free anyways. And we'll hold on to it and see how it goes. So that is generally your auction market theory in a nutshell. It could go deeper, but it would be a lot deeper. So what I'll do, I'll open up the floor for some questions, right? I'll open up the floor for some questions, and let's go. Let's clarify anything that you may have muddied. Okay, so what I want to see here, okay. So if I click on this, what I want to see here is my developing POC, right? So your point of control, what that is the fair value of that specific day. The point of control is the point at which the most volume has been transacted on that specific day. That's your point of control. So you want to see that as it develops throughout the day. And then your value area, right? That is just the range within your trading, right? So the range within where price has traded for that specific day. So those are the two that I want to see. And that's it. So to apply it, you could apply it in two ways. You could apply, so if I just switch this off. Okay, so you could apply what we call a fixed range, where you go to your indicators, you go to fixed range here, and you just choose, say for example, you wanted to go back to this Wednesday, Wednesday, Tuesday, Monday, Friday. So let's go from Friday back to today's price. If we just click on that, we'll get this, what we call a volume profile. If I click on that and I switch this volume profile off, and I put developing POC and developing value area right there, then, and I hit OK. So then that gives me the value area from Friday all the way through to today, which is a fixed range. That's why they call it fixed. It doesn't really change from day to day, right? As price will move, you'll start seeing it move. And this is pretty good because you're able to see when price drops out of the range by a big way, right? You'll be able to see how when price drops out of the range a big way, and you could make a decision as to, hey, I want to buy this back into the range. So when price gets out of balance like that, you want to buy it back into the range. Or when price gets out of balance like this, you want to sell it back into the range. And you could change the range, right? So instead of having Friday, we could just have yesterday and today. And it gives you some better information to make a more informed trading decision. You don't necessarily have to go all the way back there. So again, here today we could see that price had dropped out of value here, out of the value area, and we want to take a trade back into the value area. Okay. Now I still use my normal support and resistance level. So you could see here, I've got a support and resistance level just in here, right? So we had previous resistance, we have support, and I wanted to see whether if price breaks above that, this resistance here, I want to see it retesting as support and then pushing up. So that's why I have these arrows here. So today we were discussing that, all right, we're gonna see this fall off. We're looking for a buy in this area, pushing up, right? Let's see whether we get a retest and then a continuation push to the upside. And that's what I want to see here. And we may well see that during the Asian session. Right now is not a good time to be trading because the markets are more or less coming to a close. Right? We could even have the fixed range just on today's trading. So if we pull this back to today's session, like here, all right, so we could see the value area of today only. See price pushed out of it, and then we want to see price pushing back into back into value, right? That's the fixed range. And also we could have session volume. So if we go to session volume here, right? So that is, you'll see a volume profile for every day of trading, right? Rather than just one volume profile for a range, you'll see a volume profile for every day of trading. And again, what usually happens is in this volume profile, when price is, this here is your fair price. And when price is below this fair price, we usually see a lot of buyers wanting to come in. And when price is above the fair price, we usually see sellers. But one of them will win in any given day and push the market in a specific direction. So that's when the imbalance is formed. Okay. And again, you could take off the volume profile and take off the POC and just put developing POC and developing value area here. Okay. Okay. Anybody good? Everybody good? Any more questions? Yep, yeah, more or less, Steve. Same thing that Chris Terry had taught on, yeah. Same thing Chris Terry has taught on. Yeah, it could get deep. It could get deep. Trust me, it could get deep. But I don't want to confuse you for now. The small nuggets, bit by bit. Awesome. Right. So that's just a little insight into actually trading with volume. The volume is a big topic in trading if you want to be an independent trader, and if you want to get started on volume studies, jump into my Telegram group if you're not in there as yet, and download the book called A Complete Guide to Volume and Volume Price Analysis by Anna Cooling. I'll just type it in the chat here. All right, a complete guide to volume price analysis by Anna Cooling. Yes, fundamentals is very important for your direction. Yes, right. So whenever there is fundamental news coming up, that is very important. You could see here that I've got my high impact news highlighted And I want to see when that happens. That is very, very, very important, because at the end of the day, fundamentals is what's going to create the value of your currencies. And that is what moves the market in a specific direction. So yes, fundamentals is very, very key, right? So a lot of people do all these technical analysis and all these fancy indicators and all that as well. But the real nooks of it all, your fundamentals, is the most important out of anything else. All right. Let me see if I could make Montel the host. How do I do that? Manage participants, Montel. Yeah, he is the host.
Wow, 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 wow. Can you hear me, brother?
Yes, sir. Yes, sir. Yes, sir. Yes, sir. Yes, sir.
Wow, wow. Thank you so much for that call, man. I'm getting goosebumps right now. That was absolutely amazing, bro. Thank you so much. And we know you're busy as well. You know, you're an IML TV educator, so you really didn't have to jump on this call to educate us. But we really, really appreciate you, bro. Thank you so much.
No problem. Somebody's saying wait there. Let me see. Let's see. Oh, what's the Telegram? What's the Telegram group? Let me just drop the Telegram link in there.
They can't get enough of you, Bale.
That's okay, man. Just drop a line in Telegram, man, and we'll be good. So it's just in here. Okay, great. So that's the Telegram link there. Where do we read more about Wyckoff? Wyckoff. Where do we read more about Wyckoff? Now, funny. So Wyckoff taught a gentleman by Tom Williams, and then Tom Williams taught my mentor, and my mentor taught me. So I have a direct link to Wyckoff somewhere. Well, not direct, indirect link to Wyckoff, but his methods are interesting, and it has a lot to do with volume and price. So really, if you want to study that, it is heavy stuff. I must say, it's heavy stuff, right? It's heavy stuff, right? Right. So yeah, Wyckoff is based on market manipulation and that sort of thing. Yes. So you get to try and understand where you could see the real moves in the market, where you see the manipulation, the fake outs, that sort of thing. Because this market is definitely manipulated, all right? So to think otherwise is naive, right? The banks, one thing I want you to know as well, the banks, they trade, right? But they don't speculate every day. What do I mean by that? I mean, the banks will facilitate forex transactions. For example, if BMW has a massive transaction to make, so say for example, they've got some euros to change, and they needed to go to, or some euros to change into US, they will call up a bank and say, hey, I have X amount of million of euros that I need to change, and could I change it for this? And whatever the price is, right? Whatever the price is, that transaction will happen, because BMW needs their euros to be changed to US. And that could have an effect on the market, right? That could push the price up or down depending on the volume of euros that BMW is changing. And the bank would have facilitated that transaction. It doesn't mean that the bank was trading for themselves, okay? It doesn't mean that the bank was trading for themselves. It just means that the bank was facilitating a transaction for BMW. And the bank facilitates transactions for many different clients throughout the day, right? And that is what happens with price pushing up and pushing up and down during any given day. The banks are more swing traders, so that they would speculate only at specific prices in the market. Okay. And they would hold their trade for weeks on end. All right. And just that's how they operate in terms of speculating. But in terms of doing transactions or trading for their clients, they'll do it on a daily basis. But that is not the banks speculating on a day-to-day basis. So that's just a little insight, but it goes deeper than that. But there we go. All right. So any more questions? If no more questions, we're going to wrap it up there for the minute. So one thing we do is we do actually day trade on our sessions, right? Using the web analyzer. We do look at the web analyzer, look at the trade calls that it gives here, and then try to make some assessment as to whether we're going to take it as the analyzer is called. I do use volume stuff to help in making that decision, and like some support and resistances as well. So feel free to hop on the sessions. I'm on every day at 10 a.m. UK time. So feel free to hop on. Okay. You guys are more than welcome. Boom. All right. There we go.
Wow. Bale. Thank you so much, brother. You know, we really do appreciate you from the bottom of our hearts. I want you to do your chant, bro. I want you to say, I am our nation.
So I am. What is your profession? Come on, man. I'm not hearing you guys. Yes, sir.
You know what I want to do? I want to wrap up this call, right? I want to end the call with everybody saying, "Awoo, awoo, awoo," right? We're going to unmute everybody that's still on the call. And I want you to end this call by doing your chant, brother. But before we do that, I just want to express some gratitude and appreciation for your life, brother. Thank you so much for coming on and really helping us elevate our trading game. Guys, if you got value from everything Bale went over, just put some 7s in the chat. If you feel like your trading game has been impacted for the better today, just put some 7s on the chat. Just let him know that you're grateful for his time, you know, his effort, because he could be doing anything else, right? But today he came on to educate us and elevate our trading game. So Bale, we're so grateful for you. And you can see in the chat box, man, there's so many 7s. The chat box is about to break, right?
You're welcome. You're welcome, guys. You're welcome.
Amazing, brother. Thank you so much, man. But yeah, so we can wrap up now. Is there anything else you want to say, bro?
No, guys, it's just a practice. You know, read up on all the stuff as well. Download that book. Jump into the chat and download that book I'm telling you about and have a read. You know, it will just definitely open your minds to certain things. So that's important as you develop, all right? And practice on demo as much as you can, right? So that you could get these concepts concreted in your head. Because what you want in trading is to be able to just automatically, and it goes to be able to trade at the speed of thought. That's what you want to develop. And to be able to do that, you've got to get things sunk inside of you. Okay.
Wow. Amazing.
Yeah.
Wow. Thank you so much.
Let's unmute everybody, man. Let's unmute everybody.
I think you should run them through how to do it before we all unmute it. So run us through it, and I'm gonna.
Right. So as I said, IML, what is your profession? All you just have to do is say, "Ahoo." Just like that.
Okay,
all right.
Let's go. All right. Let me unmute everybody right now, guys. I hope you guys are ready for this. Right. So let's do it.
IML. You guys previous, man. You guys previous. You guys previous. You gotta wait for it. You gotta wait for it. So IML, what is your profession? Awesome, awesome, man. All right, so happy to be on the call. Thank you so much, Montel. Appreciate you.
Okay, brother, you just got muted, but thank you so much. We're going to wrap up the call now. Bale, thank you so much for your time, brother. You are a legend in IML forever. You're a legend in life forever. And guys, make sure you implement everything you've learned today, because this will take you to the top, guys. I'll see you at the top because the bottom is way too crowded. God bless you. I love you all. Take care and have a great night.
Thank you very much. Thank you.
Bye. You're welcome.
Bye.